think we're going to slowly start here. So today's presentation is going to be pretty casual. We all know you're all crying under finals right now. We want to make this pretty lax. First off, obviously, legal disclaimer. None of the conversations today should be taken as legal advice. A lot of these are opinions. Preferably don't sue us. And it's just for education.
Yeah. So you can just, if you don't like what we're saying, either argue with us or just don't, just ignore it. Okay.
But don't sue us.
I suppose for some of you it might be the first time you're here. We just got part of Carlson too, so we're expecting to increase the amount of Carlson students that we have going forward, in addition to the large number of the CSE students and also other students that we have. So my name is Justin. I'm a co-president here. This is Ethan. Ethan's another co-president. And so we took all the questions that you submitted for us ahead of time. If you haven't, you can always still submit questions. If we have time, we'll get to them, or you can just ask. But if you'd like to sign in, if you're not already on our mailing list, you can join at cryptoumn.com. There's a link to join our newsletter there, which I highly encourage you to do if you'd like to stay updated on the next events and so forth. Other than that, if you're already signed up, you don't need to go through any hoops or anything. We're not going to ask for your info again. So, how about we just jump into the questions that you kind of asked us to begin with. And the first one, obviously, what is blockchain, right? And so, does anyone else want to give a stab at this before I just start going? No?
No.
Okay. So, with a blockchain in the simplest sense is just a history of all the transactions that have ever happened through Bitcoin or whatever system that it's made for. Obviously, the largest one is Bitcoin, but pretty much all the cryptocurrencies use this type of blockchain format, and at least the vast majority that we're going to talk about right now. And this blockchain is stored on hundreds or thousands of computers all throughout the world. They just store a copy of all the transactions that have ever happened. And every 10 minutes with Bitcoin, on average, there's a new block that just keeps getting added. So you just keep adding these new blocks on top, and it will keep growing larger and larger. And this block contains the history of transactions that have happened in the last 10 minutes. So that way, every 10 minutes, you'll get a new block with new information, and collectively, you have the whole information. So that's really, in a quick summary, what the blockchain is. It's just the storage of data so that people throughout the world can distribute this really easily, and it's just a storage of the data. So that's really what a blockchain is in general. Everyone understand that really basic explanation of a blockchain? It just stores a record of me sending money with Bitcoin to Ethan. That's all it does. Okay, so it's kind of this, sometimes people treat it as some abstract, really crazy item, but really it's pretty simple in the basic sense. And transactions are grouped into here, and they contain a little bit of information with Bitcoin. We usually use Bitcoin as the example because it's the easiest to understand. You have a transaction ID. This just refers to one transaction, so each transaction will have its own ID. It looks like a random string, right? And within this, it just records basically three important pieces of information. The sender, so what address the Bitcoin's coming from. The receiver, what address you're sending it to. So if I was sending money to Ethan, it would be my address and his address. And also finally, the amount. So the amount of Bitcoin that's actually sent. And so in general, this is the information that's stored for a transaction, and then a bunch of these are grouped together in a block, and the blocks together make the history. So that's the explanation of the blockchain. Congratulations, you can now be consultants on blockchain, because that's pretty much all you need to know. Also, how you can sell it and so forth too. Okay.
Yeah.
You want to take the next one, I guess?
Yeah, definitely. So another common one is, what is Bitcoin? First off, anyone want to take a stab at that? So if at any point, too, if you have any questions or you want to call us out on something we're saying or have any other additional comments, feel free to. But with Bitcoin, it's a decentralized digital currency. It's one of the first that was created, or it's the first that was created. I guess that's kind of disputed. Not really, though.
What's the other one, that name?
There was some. There wasn't an exact name for it. I don't know. If you talk to me afterwards, I can look it up.
Cool.
There's some guy that had a patent on some sort of block thing or something. Something along the lines. But Bitcoin is a centralized currency created in 2009 by Satoshi Nakamoto. No one knows who he is. And then basically, it's implementing this blockchain technology, so it's a decentralized form of money at its core. I don't know if there's anything much else to say about that.
Okay.
And with that, we're gonna have some group talk now. So if you're not at like a table with a large amount of people, we could try to group into groups at these tables, and then we're gonna start talking about this, and then in the small groups.
Yeah, so if you're like 2 people on a table, just, cram together into a small number of tables, and then discuss this question. So we want you to talk about, okay, how can this arbitrary item, this coin that isn't really backed by anything, at least by some official entity, how can it store value? How is it worth anything in the first place? And is it a good store of value if it's volatile, even if the price is just going up recently? And of course, that's not guaranteed, but if something's volatile, can it still be a good store of value? And we just want to hear your thoughts, go in your groups, discuss, and then we'll ask on for participations to kind of give answers with your group. So yeah, take a second, discuss this with your groups, and we'd love to hear what you have to say.
Okay, we're gonna start grouping back up, so slowly start any conversation. And then with that, we're gonna have each individual group, or not each individual group. If you want to, you can share your thoughts, and then Justin also has some nice prizes for you. It's this nice Monero webcam cover. It's got a nice slide action right here.
I have some extra, so this is our giveaway.
So that's our giveaway. So if you raise your hand and share your opinion, you get this awesome gift.
There you go.
So what are the people's thoughts on this? Oh, no one's voting on this?
On what? Excuse me.
On the question, yeah, the question.
Oh my, say something. Almost like I have this money.
So who wants to take a stab at why does Bitcoin have any value right now? Why is it worth, what, $18,000-ish right now? Yeah,
The way I look at
excellent.
it's being hyped up, everybody looks at it and they're like, oh, people think it has value, so I want to give it value, and then they buy into it. So everybody just keeps putting more money into it, saying that it has value, and so it has value. Similar to everybody trusts in the US dollar or other people's money. They say it has value, I can use this as a means of exchange to buy something else, and so it has value in that sense. But then the way I look at it, because it's so volatile, I get concerned because obviously if I buy some Bitcoin, by 5 hours from then, it may not be worth the same amount that I just put in.
Right.
So it's like, why would I ever want to use that as a currency?
Yeah, so congratulations.
Woo.
But yeah, that's a good point. So Bitcoin really has value because people say it has value. There's nothing inherently on Bitcoin's behalf where it's like, wow, this has value because you can exchange it for a physical item or anything. It's just an abstract idea. But at least with the dollar, you have at least a large government behind it that's saying if you don't accept this, we're gonna make you, right? So what beyond that? How does Bitcoin have why do people say it has value, do you think? Even though you don't have any real thing behind it. You just have this distributed number. Eric?
So I think that Bitcoin might have value simply because if you want to buy another coin, say Monero.
Another one.
Yeah, no, that's okay. No, say you want to buy another coin Monero because Monero is basically traceless. You can do all sorts of cool stuff. Say you wanted to, just theoretically, you would have to buy Bitcoin first, right? So you would have to because I wanted to buy Lumens the other day. I can't put in dollars and go straight to Lumens. None of the major exchanges do that. You have to buy Bitcoin and then you can buy Lumens or whatever. So it's just one of those things that it just kind of drives up the price, I feel just because if you have demand for other coins, then you have to go through that channel.
Okay, so Bitcoin has become the middle, the middle man in a sense to transact in your point of view.
Yeah, I think so.
Okay, anyone else? Yeah.
But also just say from what I read in the news, what gives people confidence is first that multiple merchants do accept Bitcoin, although it's volatile, it's still a currency. Secondly, right now, some of the exchanges actually sell futures for Bitcoin, and also just the fact that the Wall Street has started to accept Bitcoin as a legitimate form of investment, also sparks people's interest.
Right. So here you go. And then one more. Would you like to answer real quick?
Yeah, I mean, Bitcoin's value is the exact opposite of why the US dollar has value. So, I mean, its real reason is the ability to not be governed by a sole entity or by a group or an individual and control it. And that gives it its value, its security, or the freedom to give all of us our freedom in that currency. So that's where the value comes in, and of course the blockchain.
So you think that there's just some, even though it's not a tangible item, there's still like inherent value in that sort of belief and so forth?
I definitely, I mean, I'm someone who could argue a lot for a while about like the US dollar. Like there's a lot that you could go into and speak of when it comes to the US dollar and its value. Like what you just said, it's backed on the government's word. It's not backed by anything. So it's like, at least with the Bitcoin, like we don't even know what's going on with the US dollars, but at least with Bitcoin, we have a form of blockchain in which we know what's going on with that currency and stuff. So I see that as well.
Okay, awesome. Okay, yeah.
And yeah, to kind of tack on to that, like since US dollars are linked to the US government, if there was like a governmental collapse or something, it wouldn't be worth money anymore. But like Bitcoin, since it's not attached to a government, can still like persevere.
Yeah.
Plus, we were just talking about how it's kind of immune to inflation because there's like a finite supply of it.
Right. We'll talk maybe a little bit more on inflation if we have time, but it's kind of funny because Bitcoin's really increasing in value, but it has really high inflation right now. So, I mean, they know that in the future there's a promise of no inflation or deflation, but at the moment there's actually a lot of inflation. So that's kind of interesting. Okay, so we're gonna move on.
Yep.
Yeah, thanks everyone for joining us in that. So the next question, how do I start investing in cryptocurrencies? Typically, we suggest that everyone just starts out with Coinbase, just because it's really, really easy. You can download an app, you can go to a website. It's exceptionally simple to register your debit card, credit card, bank account. They'll take pretty much any form of payment. And you can verify your identity and then start purchasing pretty easily. And although Coinbase holds your money for you, you're trusting Coinbase to maintain your funds and not get hacked or anything. You could, of course, take them off and keep them yourself, which we encourage you to do and learn how to do. But as far as transacting with or exchanging to actually get Bitcoin in the first place, it's pretty much the easiest way to do it. Unfortunately, GDAX, which is an exchange run by Coinbase, is not licensed in Minnesota. So if you have a Minnesota address and don't have another mailing address, you're not allowed to use it here. But Coinbase is still the easiest to use, and so we highly suggest that. There's several other exchanges. We're not paid by Coinbase to say that. Well, even though we like Coinbase a lot personally, but we don't have any or anything. But there's tons of other exchanges you can use. You can use Gemini. Coinbase only supports 3 cryptocurrencies. So you have to use something else like Bruininks or Shapeshift or some other exchange to convert to other cryptocurrency types. You can use Kraken. There's a relatively large number of exchanges depending on what you're wanting to purchase. But in general, if you're just starting out, we usually suggest Coinbase just to make it really easy. And we'd be happy to walk anyone through, hey, I want to try putting $10 in or something. That's something we'd love to help you with. Not that we want to encourage you to necessarily invest, but we want to encourage you to walk you through the process and so forth.
Yeah, kind of with that associated, what are the best exchanges? So Coinbase isn't really considered an exchange because you're not buying and selling with the market on that. Compared to some of these other ones like Kraken, Gemini, Bruininks, Shapeshift. One thing that we recommend is it's okay to store cryptocurrencies on Coinbase. I would argue we still recommend taking it off, as Justin was saying. But on a lot of these other exchanges, they're a lot sketchier, might be the way to put it. So we'd highly recommend you keeping your cryptocurrencies off of it. So for example, Kraken goes down a lot. I know Bitfinex has had several hacks. Back in the day, if you know much about Bitcoin's history, there was a huge exchange called Mt. Gox, and that got hacked.
I was just going to ask, what do you mean by taking it off of it?
Yeah, so with cryptocurrencies, you can either store it on the exchange and they hold it for you, so they hold the keys to your wallet, so the access to move these cryptocurrencies around. Or for example, you can create your own wallet, and there's many other ways to do that. Hardware, web wallets, software wallets, there's a lot of different ways, which we can go into more specifics later, which you hold the private keys yourself, so if Coinbase was hacked, you wouldn't lose all your cryptocurrencies. Yeah, so those are the ones that we recommend. I know personally I use Kraken, Bruininks. Bruininks is, again, sketchy, but, and Shapeshift is another good source. It's super easy. You don't even have to create an account for it. but they do have higher transaction fees, I know.
Yeah.
Is that true?
No, not really. Just for simplicity, Coinbase and Shapeshift. If you want to reduce fees, then you can start looking at other options.
Yeah.
Okay, so what fueled the most recent price increases in Bitcoin? Because if you check like a week or two ago, even despite the previous growth before that, I would not have anticipated where it is now. Like I said, it's grown from less than $1,000 at the beginning of the year to over $18,000 now. So it's a pretty large increase, especially considering it's not really small anymore. It's not like it's a total valuation of $1 million or so. It's billions of dollars at this point. So that's pretty large. So we speculate that it was mostly based off the Bitcoin futures speculation and the introduction of these markets. So how many people have like taken finance and are familiar with like a futures market? Okay, so we got the Carlson people. So that's an equivalent question. So with the futures market, it's basically just like Ethan and I make an agreement saying, hey, 2 months from now, I'm going to give you $10,000 for 1 Bitcoin. And then 2 months from now, regardless what the price of Bitcoin is, we're going to make this exchange. And so people can look at the kind of the futures market to try and estimate what the prices kind of will be in the future going forward. They can use the futures market to help plan out future prices a little bit better. So that's one way that people think that going forward Bitcoin might be a little less volatile, because at the moment you're kind of trading in the moment and you don't really have any other futures data to base off of. Now you'll have some futures data, and ideally, eventually, it would start to correlate with this futures data and you can predict what the future prices might be. And so that's why some people think they'll be less volatile. But the reason the price has gone up, in our opinion, is because futures are an important financial tool in several different markets. They're well established. For example, this is on the CBOE, the Chicago Board of Chicago Exchange, basically. You should know that one. So they're established exchanges, and it kind of speaks to Bitcoin becoming more legitimate. So I think that kind of drives a lot of people into it. And it also makes it more accessible for people who want to invest money in Bitcoin. They can more easily, perhaps, if they're already familiar with the existing financial system, start interacting and buying Bitcoin that way. So that's our speculation. And of course, you've seen strong Bitcoin in the news, so kind of good news fuels good, more good news, and just so you kind of have this rally that if people have only been around for the past 3 months and are like, wow, I missed out 3 months ago, I better just hop in now. And people continually do that every 3 months. It kind of creates the snowball effect, and hopefully it means that we're not running into a bubble, but it's hard to say.
Yeah. So with that, crypto is analogous to the dot-com bubble. This will be another group discussion. So meet with the groups, and we'll report back in a little bit.
Okay, so for the sake of time, we're going to get back together. So again, incentives. Anyone who has an answer for me? There's no right or wrong answer to this. If you knew the right or wrong answer for this, let me know. Okay. So, anyone want to just give me your opinion. We want to just hear people's opinions. Yeah.
They're very new. There's a whole lot of them. People aren't entirely sure of all the applications of them, and the same kind of thing happened around the turn of the century with the dawn of the internet. Lots of web-based companies and really high on paper valuations. There's people wonder what is the actual value, and I think that people see kind of the same thing happening with some cryptocurrencies, or all of them.
Right. Yeah. There's definitely a lot of. I think part of that is fueled by the misinformation in this space. Everyone thinks that Bitcoin will they have at least expectations for Bitcoin to replace the dollar, Ethereum to replace the internet, and they have some crazy ideas possibly, and that kind of fuels a lot of not exactly completely accurate or realistic examples when they're trying to give evaluations and so forth. Anyone else have anything they want to add?
Yeah. I think some currencies might be more valuable or less valuable in the future, but I think that the technology of blockchain and how it's going to be used to innovate financial markets and companies as a whole is going to grow in the future. So I think the underlying technology, rather than just the cryptocurrency itself, is going to be where the value comes from. And I don't see a bubble in that.
Okay, awesome. Anyone else? Okay. Thanks for your participation. So what kind of things cause crashes and corrections? So, do you want to speak on the FUD part? So FUD, if you get more involved in cryptocurrencies, so if you start going on Reddit and Slack channels and everything, you'll hear this term FUD often. It stands for fear, uncertainty, and doubt. And the reason people talk about it so much is because you have a lot of people that try and troll. Because there's really no cost to trolling. I mean, there could be if you really wanted to make a big impact, but if someone wanted to just do some like part-time trolling, they could easily do that, and there's no cost, and there's perhaps a financial incentive for them to do that. So they might spread completely misinformation, or even perhaps it could be real information that gets out that causes like, oh wow, the person behind this doesn't actually work for Microsoft, and then the price will decrease or something. So typically it's either some new information comes out, or you have some misinformation that gets out. That's common too, or even you just have someone just feeling like pumping and dumping. Because even though in regular stock markets pumping and dumping is supposed to be illegal and it's restricted a lot more, within cryptocurrencies you're not really seeing any regulation for that. So it's common for some no-name coin to just really pump for no reason, and that's just because someone just wants to mess with it and hope that other people will jump on board as they're just screwing around. So you kind of have an interesting situation there with crashes and corrections and so forth. Of course, if you have certain states or countries that try to ban cryptocurrencies, typically that's a bad thing. Sometimes it can go up. You never know. That's why it's so hard to predict. So like, for instance, you could have like the EU try and ban Bitcoin and be like, wow, this should go down because less people can use it. Or they'll be like, wow, more people know what it is, so the price will go up. Like, it's really all over the place, and that's why it's really hard to kind of figure out. But in general, I would say really any news kind of typically drives the price in some way or another. And so it's really hard to, even if it's positive or negative news, it doesn't mean it correlates at all. And then typically I like to say that fundamentals generally support a coin to make it have less crashes and corrections. If something is regarded to have high value, like for instance Bitcoin, it's typically regarded as like a store of value and so forth by many people, and so that makes it less prone to crashes and corrections than some coin that is just there mostly for pumping and dumping. So it doesn't mean it can't crash. It surely can. It is totally possible for Bitcoin to crash down to $1,000 right now, maybe less, but it's less likely than one of these like really no-name type cryptocurrencies. Anything else you want to add?
Yeah, with that, you can see this in the historical perspective too of Bitcoin. In the past, many of Bitcoin's crashes have been due to China. Rumors about China at least saying that they're going to ban crypto or Bitcoin specifically one way or the other, and that was a lot of the price fluctuations in the early days.
So what are some ways that people can like find new cryptos? Everyone's like, oh, how do I find like the next new one? And I encourage everyone to be very careful here, because typically when you see a new cryptocurrency going around, it's like a scam 99% of the time, because all it takes is someone with a lot of Reddit accounts or YouTube accounts or Twitter accounts or really anything to just be like, wow, have you seen this? And just like it a few times, retweet it a few times, and all of a sudden it's all over the place, and you can't get the stupid thing off your screen because it shows up everywhere. And it doesn't mean that just because you're seeing it everywhere that it actually has value, or it really has any development or any significance whatsoever. It could be me just renting a bunch of Twitter accounts and just making my own coin and pumping that, which I haven't done, but it's relatively common for people to want to try and do that because it's really free money and they don't really have anything to lose. So you really need to kind of be vigilant in that regard. But in general, you can do your best to try and figure out what new cryptocurrencies are coming out. I typically discourage people from going to Bitcoin Talk now because it's kind of just a mess. But you can, as you start to spend more time in the space, you'll get a greater sense for understanding after you've kind of learned a little bit more what certain people are saying is like backed by evidence and legitimate and so forth, and what other people are just kind of saying out of thin air. So if someone says a buzzword, ask them about it. Look to see, okay, they say that something is like no fees or something. Is it no fees? What makes it no fees? Is it just that no one uses it and so there's no demand and therefore the fees are zero? Or is it, wow, they actually have a really cool technology that's significantly more efficient than most, and that's what gives it value, that's actually cool. Typically you have the former case where they're just pumping a coin. And so over time, you'll kind of learn to see which kind of keywords you need to look for and learn how to dig deep into these items, but it's really hard to begin with. I suggest if you're first starting out, I mean, I'm a moderator now on our cryptocurrency, so if any of you are on Reddit, I'm working to try and make cryptocurrency subreddit a little bit more digestible for people who are trying to learn more. That's what I've kind of been tasked with. But in general, just be cautious of all the resources you're reading because anyone can make them and they're usually hidden by some like pseudonymous identity, and so they could really have any motive for what they're writing. So just keep those things in mind. What makes coins different from one another? A lot of things. Sometimes a lot of things. Sometimes nothing. So for the difference of like Bitcoin versus Ethereum, they're pretty wide differences. So although you could argue many aspects are the same, they have different project goals, they have different development, they have distinct development teams, they have distinct researchers, they have distinct focuses. They're pretty different. And then you take something like Bitcoin and Dogecoin, where you just like change the emission and call it a day. For that case, you'll have different teams, you have different communities behind them, but it doesn't mean they're necessarily like a big difference between the two. There's a much bigger difference between Bitcoin and Ethereum than there is between Bitcoin and Dogecoin. And that's just something that with research and time you can kind of learn to figure out, but keep in mind that just because it's a different coin doesn't mean it's necessarily anything new. Since open source projects, you can start a replica of a coin with basically no effort, so keep that in mind. And then it would be just an exact copy. You want to take this one?
Yeah, with that, what more makes a coin successful? And this is kind of involving with a lot of what we've been talking so far about scams and things like that. So oftentimes I like to compare this to actually investing in real companies and what they look for in that. We can touch on this in the next slide too, but practicality, obviously, what's the reason for them creating this? Why does this need to have a blockchain? What's the actual value of adding a blockchain to this? If there's nothing, then it's probably not a good investment. White paper, if they actually have a legitimate white paper that has sound technical details, any sort of roadmaps, if they have future goals, and a team that is not just a bunch of fake LinkedIn accounts.
Yeah, one more thing I want to add to that too. So it's common in cryptocurrencies for you to be like, wow, we have a really bad system that's existing right now. Let's just build it on a blockchain and it will be better. That might be fair, but I want you to ask an additional question. So is there a benefit to rebuilding the system in a blockchain, or is it better just to have a non-terrible centralized system? And I argue that 99% of the time, it's typically better just to open a website that just isn't as bad as the one you're trying to compete against, and that will outperform a blockchain type startup 99% of the time. Not necessarily in raising money or anything, because we know that everyone's interested in putting money in ICOs and so forth, but in terms of what actually makes sense from a fundamental perspective, 99% of the time is just making a more efficient version of what is already out there. So keep that in mind.
Yeah, kind of with that, how do you spot the next big one versus a scam? Just in saying, looking at fundamentals that we've been talking about so far. And actually, if you're not on our Crypto Humans Slack and you're a student here, I'd highly recommend going on that. And if you go to the general channel right now, there's actually a conversation about this going on right now. Connor just posted a great link to just a 5-page PDF talking about valuing crypto assets from a professional investor. And then also he recommended this book too, about an hour ago, Crypto Assets, which is on Amazon for like $20. And as Justin said, why does this need a blockchain is always a great question to think about.
So the best thing you can do starting off is, if you're not sure, ask, and then question the opinion of someone the person you ask. So don't just like ask on their subreddit, like, do you think that, like, hey, Scamcoin, do you think Scamcoin's a scam? They're gonna say no. or maybe they'll say yes because that's the thing. But it definitely takes a lot of really important critical thinking. And the hard thing too is like someone will ask you, okay, does this coin have, is it a solid project and will the price go up? The answer to the two questions might not be the same, right? It could be a terrible project and the price would still go up. I can't give you really any advice on price speculation, to be honest. But at least we can, with this Slack, we really try to provide people at least some fundamental examples so that people can be like, okay, this is why we think that this coin has good fundamentals for these reasons, and these are our concerns, or we don't really see anything in this coin for these reasons. And so that's a good place if you just want to start off. We suggest that. Of course, we host the resource, so of course we're going to suggest that. So again, question everyone. But that's just something we're trying to do to make it easier for people.
And then with that, any questions so far? It's probably a good point.
Yeah.
Does it need no question?
Okay. So what are some good coins to start the portfolio? I would start, basically start your way at, go to Coin Market Cap and kind of work your way down. And start looking at the different cryptocurrencies, and again, don't take all their claims at face value. Because just because something says that it's private, or just because something says that it's instant or free or whatever, doesn't mean it actually is. So again, that's really hard to evaluate, but just start off making a list of ones that you think are interesting, and then kind of start going to different. Think of what do you think people will use cryptocurrencies for? Because no one really has the right answer to these questions. I mean, I can speculate, I have my opinion, Ethan has his opinion, everyone has their opinion, and in the moment we don't really know which one is going to actually be the winning reason in 5 or 10 years, or even 1 year, right? So we typically say start with the established projects, start with Bitcoin, Ethereum, and Litecoin. All three of these are tradable on Coinbase. So if you just want to have an easy start, and you want to throw 10 or 20 bucks in, these would be the three to start with, in my opinion. And then you can start researching the different assets. I spent 2 years researching anything before I even put $1 in cryptocurrencies. And you don't necessarily need to take the same advice, but it just speaks to, from my opinion, if you take the time to actually learn a little bit about the fundamentals of the coins you're trading, you will be far ahead of everyone else you're trying to compete with who doesn't know anything about the assets of trading, in my opinion at least. Yeah, quick question?
Yeah, are you aware of any ETFs or mutual funds that just hold crypto coins?
So I don't know of any from traditional banks and so forth. I know Honor has a Roth IRA, a self-managed Roth IRA that is with trading crypto. It's it's not actually cryptocurrencies, but it's tied to the price of certain cryptocurrency assets. So it's possible to have some certain workarounds that are really hard to do right now, and there's a 20% difference between the actual price and what he's trading. So it's kind of crazy. So that we're kind of waiting for regulation to really get there and established markets to really get to that point. So kind of, but I would say mostly no. But hopefully we can get closer and closer there. Can I answer your question?
Yeah.
I've kind of forgot about that.
No, yeah, that's so kind of wait for it to be regulated before banks can start securitizing stuff.
Yeah, so you're kind of waiting on a lot of the actual traditional banking systems to kind of be built around it, and so now you're just kind of left with open exchanges.
I think there is some sort of stock that tracks Bitcoin though, but the premium on it is really high.
Yeah, the one thing I wanted to say with mutual funds and so forth, there are certain, they make a coin whose valuation is tied to the values of other coins. So they'll do an ICO, they'll raise money, and they'll buy a bunch of other cryptocurrency, and then the price of those coins will be tied indirectly to the cryptocurrency, and you could redeem it or whatever. You basically trade that on an open market, so it's kind of weird. Those typically have high fees, or the people who make them take a large cut when they first start the fund, so there's really not a good option. And I think in the US, we're kind of leaning towards, in order to actually participate in those, you need to be an accredited investor, which means you need to have a net worth of over $1 million that you can prove, or over $200,000 a year, I believe, in income, which it's possible for people in this room, I suppose, but unlikely. And so we're kind of getting to the point where they're like, hey, this is a volatile asset. If you're going to start a company, then ask for investors. You should only be asking for people who can afford to take the risk. And so that is kind of closing, not that it was necessarily really a good option in the first place. Typically, just because you have large market caps concentrated around like the top 10, 20 coins, it's probably best for you just to kind of recreate a portfolio yourself, in my opinion. Okay, so how does mining work? Is anyone here like really interested in mining? Just curious. Okay, got 2 people. Okay, awesome. So you guys will like this. So mining is, there's really like 2 types of computers on the network for Bitcoin. And we're kind of switching so that certain coins like Ethereum no longer have this system, but currently they still have it. And you have the nodes, which maintain the copy of the blockchain we talked about earlier. And then you have miners, which actually keep the network secure. So you have this like open race, where you have blocks that are just kind of generated by the network. And with these blocks, they come up with a problem set that you need to solve in order to get an associated reward from this block. So congratulations, you solved this math problem, you get some money. And so that sounds great, right? You can just opt in for math problems and so forth. But it takes computational resources for you to actually participate in this. You need to have the hardware to do it. So you need to have like, with Bitcoin, you need a dedicated miner that specifically only mines Bitcoin in order to be competitive. With certain coins, it's not the case, but it's common for that to be the case. And you also need to pay the electricity cost to maintain that. Of course, if you're in a dorm, congratulations. But most people would have, and you would be able to get away on a small scale in your dorm, but not like you can't open a data center in your dorm, right? And so mining works is that you have this, like a bunch of people, all these computers compete for this guess and check problem. And as more people compete, the problem gets harder, so that on average it's solved in a certain amount of time. So you can think like a guess and check, like if there was 1 million guesses, like on average for it to solve it, then and everyone makes a guess a minute, then you need like 1 million computers per minute guessing. That's kind of how it works in general. Everyone competes, and the whole idea is that it creates a situation where it's uncertain who will actually solve this block. Because whoever solves this block gets to sign off on what transactions are processed in this block. And so you don't want one person that's able to dictate, I'm going to sign only transactions I like, or prevent certain ones, or try and like reverse transactions or something. This is actually what keeps Bitcoin secure. It's called proof of work, and mining is essential for this type of proof of work security system. Some people argue that the reason Bitcoin has value is because you have a ton of these computers all taking their computational power in order to provide the security. So you're guaranteed, basically, I mean you're not guaranteed, but because the network is sufficiently large, you're nearly absolutely guaranteed that it's secure from that perspective. And so as long as one person isn't messing around with that, you're safe. And it would have to be one person doing better than the rest of the world combined, which is why you typically have a good idea for a large network. You can still mine on your graphics card or CPU. We can speak after if you'd like to just use your gaming computer's free time to do that or something, especially if you're in a dorm. It would be something that would be cool to play around with. Don't expect to be like a millionaire, but it's still possible to make some money mining. A lot of people buy a new gaming computer and then use their graphics card in the background to kind of subsidize the cost of the card. So if they wanted originally like a 1060, they might buy that 1080 and then make money back over time if they can swing that.
Yeah, if you're just buying equipment from scratch, though, I wouldn't recommend doing that.
Yeah.
Unless you want to do it for fun.
Yeah, it's like don't bank on the games, but that's just something that people commonly do. Yeah, Eric.
So if you're not in a dorm,
Typically, the answer is yes, but at a much slower rate.
And depends a lot. Too.
Yeah.
What are you mining? The value of it in the future, difficulty. So for example, I mined Ethereum like 3 months ago and it was profitable for like a month, and then after that the electricity costs just took over really, really quick. I did it for fun though, so but I don't mind, but if I was actually trying to make money, it would be terrible.
Yeah, I typically say mining from trying to make money perspective is pretty boring. Because you're competing against everyone else. Ideally, in a completely free market, you would break even at best all the time. So that's why it's really boring. But it's kind of fun just to set up the computers, especially if your primary goal is like, hey, I already have this equipment, let me just mess around with it. That's usually, that's what we usually suggest.
And if you're looking into actually doing it, you can check out the site we have listed there, whattomine.com,
Yeah.
and you can talk to us about that.
Yeah, that'll just be like, hey, this is your equipment, what should you mine that's most profitable? So one question we always get, again, not investment or legal advice, but do you have to pay taxes when you're doing crypto investing? The answer is clearly yes. When you buy cryptocurrencies, you don't need to pay taxes, but the second you realize the gains, you need to pay taxes on it. So suppose that, or loss. So if you invested $100, congrats, it went up, you now have $1,000, you need to pay capital gains on the $900 gain. Or if you lose $900, then congrats, you get a tax credit. Yeah.
Should you actually pay taxes on what you already sold, or even if you don't sell it, you just keep it?
So if I have Bitcoin, let's say I buy Bitcoin for $100, at the end of the year it's worth $1,000, but I haven't sold it yet. You do not pay taxes yet, at least from our non-legal opinion.
Yeah.
And I think that's typically regarded, because like when you buy and sell securities like stocks, you don't pay taxes until you actually, either like dividend income, or, which isn't relevant in cryptocurrencies for the most part, or if you actually like sell the stock, you would pay the gain on the stock. It's similar with cryptocurrencies. Keep in mind that there is an incentive on the federal level if you hold on to the cryptocurrency for more than 1 year. If you hold on to it for less than a year, you pay your normal income tax rate. More than a year, it gets reduced to 15% on the federal level. But for the state of Minnesota, you're going to pay the income, like the normal income level regardless. So just keep that in mind. If you come from Wisconsin or North Dakota, you have some different rules. They're one of like 9 states that have different rules, so you have to look into those. But most people, Minnesota, Illinois, and most of them have the rules such that you're taxed at the income rate.
Alongside that, if you convert, say, Bitcoin to another cryptocurrency, that's actually realizing the value of it too. So you have to pay taxes on that.
Yeah, a lot of people, I think that's a little bit rare, but I think it's getting to the point where that is becoming more widely accepted as what you're supposed to, as best practices in taxes.
Kind of discuss this.
Yeah, so
And then we got another table conversation here. So will government interference be the downfall?
Okay, so go together. This will be one of the last questions we have, I think, based on time. But discuss. What do you think that government interference is an issue with cryptocurrencies? And just think about that in general. Okay, for the sake of time, we're gonna come back together. So real quick, a quick participation here. So, yes.
What we discussed about it is no, because it's such like a relatively new idea and thing that it would probably take about 5 to 10 years for them to even like try to pass something like that, but we don't even know where these cryptocurrencies will be in 5 to 10 years at this point. So it's like at that time span, it's up in the air, like right now, as of now.
It's like a typical problem. Government's having trouble keeping up with technology and their regulations and so forth. Yes.
One of the things we talked about is there's a lot of different ways to interfere. So there can be more direct legislation that's trying to regulate markets, or other ways that are more kind of through the back door. We're talking about some legislation that's going through Congress now or soon about basically it's illegalizing the intentional hiding of crypto assets. Basically, you can't intentionally hide the fact that
Right. Yeah. A lot of ways they can try to approach regulate these markets, like either directly, like no exchanges, or let's just make it hard for people to actually own it. And that's, it might have the same effect. Any other thoughts? Okay, good. So for the sake of time, we're going to kind of blast through the last few that we have. So what are decentralized apps? Examples. Ethan.
Yeah, so decentralized apps, applications built on top of Ethereum, the applications that don't have a centralized party, like cryptocurrencies. Examples: Life Lottery, CryptoKitties, big one, and Augur. And for what makes Ethereum most prominent in terms of blockchain, it's kind of disputed, but basically it was the first huge community, and then it has Vitalik, the holy leader, there. Next one. For this one, the slowing of ETH network by CryptoKitties indicate that it cannot scale. Most likely no, there's a lot of technologies that they're planning to add to it to hopefully make it scale. But it definitely shows a lot of potential flaws in it.
Yeah, so it's kind of like the current situation is if it's stuck, if the technology stays where it is now and nothing ever changes, it probably can't scale, especially to the scope that everyone's trying to hype it up to be. However, there's a lot of promising improvements, so we can hope that even if it's not as good as a centralized system in terms of efficiency, it kind of closes the gap enough that it's reasonable. And this is like the most important question. So we got this like the very first meeting that we had in early 2016. How do I know that some nerd somewhere isn't going to steal my shit? And the important thing, that the really best thing you can do is just learn about security. Because really what you're doing with cryptocurrencies is saying, okay, yes bank, I know that you have all of these consumer protections to protect me. I'm going to say no thank you and do it all myself. And so if you, it's as if you just share your social security number and broadcast that. You're not going to want to do that because it opens yourself up to a lot of risk and so forth. If you just hand out your private keys or just leave your mnemonic seed, which you can restore your account with, on a table somewhere, it's not very good practice and likely you're going to lose all your money. So it's really up to you to guarantee that someone doesn't steal your stuff. And you also need to put the trust that the network is large enough that you don't have miners or something that are able to take it that way, or that there are enough research into it to make sure that the technology is actually sound. And so all those items kind of come together, but I'd say for most people, be concerned, like unless you're a researcher that really knows cryptography, just do the best to make sure that you guard your funds properly, especially if you have more than what you normally keep in your wallet on. Okay, so any more questions before we end up?
And if you have any individual questions, you can always.
Yeah, I'll be around for however much after this. So we have plenty of time to answer
Are
questions.
there any issues in the future with how much power, mining and all that consumes on just a large scale? That affected?
Yeah, so there's I think from a practicality standpoint, I don't think that's typically what people are afraid of. I guess there shouldn't be too many concerns about just generating enough power, but I know that there's a lot of concerns with the economic, or not economic, environmental impact of all the mining and so forth. And so I think that in general it's a good practice to reduce the amount of energy used, but there are a lot of opinions out there currently that the system is not secure enough unless you have this energy burn, in a sense. So if it's a real cost to the people who are trying to secure the network, and so if you don't have that cost, some people are concerned that there's not enough actually keeping the network secure. So there's a really long answer that you can really give to those sort of questions. There's a lot of debate back and forth. Ethereum is trying to get away from proof of work. They would like to move into a system where people who previously hold coins can kind of put them in as a bond and then process transactions that way. And if they screw people over, they lose their bonds and so forth, and that's the incentive to perform well. But there's questions whether or not this completely internal system is secure enough, because to someone, Ethereum might not have value. Maybe they have a lot of it, and they don't care if they just lose all their money because it's not real dollars, so they don't care. And so it's kind of an interesting and difficult question to answer. And so we're still there's a lot of strong opinions on these, and so we're kind of still trying to test a lot of these things. Okay, anyone other questions? Okay, cool. Yeah, thanks again for coming. I know you all have finals and so forth. We have plenty of soda. I mean, I don't know if it'll be enough.
Maybe not.
But yeah, of course, if you're not already on our mailing list, please join our mailing list. It's on our website that's written all throughout the room. It was at least I feel like it would be very beneficial for you to join our Slack, because everyone, or at least most people in the club, are on our Slack, and so it's a good way to, whether you're interested in trading or just want to learn more about coins and so forth, that's a great place to message everyone else and kind of get questions that way. So that's how we communicate within a group, so I highly encourage that. And of course, we still have our Facebook, where we'll typically post our events there too, but the big ones are our mailing list for the events and Slack, because those are the most important for staying up to date and so forth. So when you're away, you can be away at Christmas and you can still be chatting, be hey, did you see the price of Bitcoin? And no one in your family is going to really care, but we will.
But we will care for you.
So enjoy that. So again, thanks for coming. I have plenty of extra webcam covers if you want to grab them, stickers. So yeah, thanks again.
Yeah.